Good afternoon, everyone. So, my name's James. I have the pleasure here of moderating what I think is going to be a fantastic and engaging panel today on InsurTech. No pressure, guys. So, what exactly is InsurTech? I found the following definition on the internet with a bit of a Google search. Much like fintech, InsurTech is quite simply the application of technology to address the long list of problems that currently faces one of finance's most unloved siblings, insurance. Okay, so a lot of implications to that statement. Problems, unloved. I think we can all agree that insurance is a necessary service for consumers, for businesses, for governments at large. However, I think we can equally agree that the industry is working very hard to better serve customers in new and different ways. Ideally, we'd want our customers to say, I totally get insurance, and I really enjoy buying it. But I'm guessing we're not there yet. So InsurTech is perhaps a conduit and an accelerator to achieving these great customer outcomes. But of course, many questions arise. Are they an enabler to supporting our business models? Or are they a disruptor threatening our business models? My distinguished panel of two here will help us unpack this opportunity. First, we have Nigel Walsh on the left here. Nigel's a partner at Deloitte in the financial services practice in the UK. He has a background in end-to-end technology transformation, digital transformation, and InsurTech, enabling insurers on the journey to become a true digital insurer. He's one of the leading members of the InsurTech global movement and has been a mentor for many startups, including the Startup Bootcamp InsurTech program. Now to Nigel's left is Dan Adamson. Dan has served as Outside IQ's CEO since its inception as an expert on vertical search, use of big data, and cognitive computing with more than 15 years in the industry. He helped launch Bing, which as you all know is Microsoft's search engine, and holds both search algorithm and cognitive computing patents, and has been named one of the most influential must-see thought leaders in AI and fintech. Now, both of these gentlemen will offer a perspective from a global perspective and a Canadian perspective on InsurTech. Following that, we'll engage in some Q&A and take questions from the audience as well. So we have about 50 minutes. I encourage you all to ask as many questions as you can within that time. So with that said, ladies and gentlemen, let's welcome Nigel Walsh.
So good afternoon, everyone. Straight after lunch and just after one more session on IFRS 17, and we're straight into InsurTech here and now. I'm not sure where I actually start. I continue to be amazed by insurance, and I am one of those guys that gets excited by it, as you will tell over the next few minutes. I've never had a conference that started with the inspection of bull's testicles leading to insurance over lunch. I just find it an amazing industry. Anyway, so disruption. So I'm going to go green button. We all see this day in, day out. We open up any press that you want, any newspaper, any search engine, and you see the world is falling, right? And you go, oh my God, whether it's the FT, whether it's insurance trade magazines, you name it, the world is changing and it's all been disrupted and insurance is going to fall off a cliff tomorrow. I won't ask for a show of hands because I'm sure no one will put their hand up if I said if they believe that's true. And I agree with you, it is not true. But there is definitely something on the horizon that over the last couple of years has gained more and more momentum. I go back 2 years, maybe 3 years, and there was a couple, maybe 10, 20, no more than 100 of folks in the InsurTech space. Again, to James's definition, companies disrupting in technology. And whether you believe any of these stories, I mean, we've all heard about Lemonade and the cool things that they're doing and what they're up to. We'll have seen the big news out of Japan at the beginning of the year where we were taking out jobs. Now, I've been in technology for quite a while. I've never put a system in place that will actually add more jobs to the equation. And from the laughs around the room and the smiles, I think you're all probably in the same boat. Let's put a new core system in place and double our workforce. It doesn't happen. Technology is there to improve things. In fact, On the flight over, I was watching Hidden Figures, which is a great film about computing and NASA and how the IBM mainframe was going to take out jobs and run stuff. Amazing film if you haven't watched it. If you saw the data presentation earlier, a really good link. But you look at all this, and there's good sides to the story and there's bad sides to the story. The folks that have gadgets in their homes, in their offices, in their workplaces. I say gadgets loosely, right? IoT devices, things that track and give us more data. However you look at it, this is real, it's here and now. As I said, a few years back, you're looking at about 100 startups. Today, there's probably north of 1,400 startups in the InsurTech space. I said that right, 1,400. And I can't count daily now the number of new companies that are coming to me going, Nigel, I want to talk to you about what we're doing on this. It usually has the word algorithm, AI, or blockchain, to Leanne's points earlier, around there somewhere, but it's a really exciting space. We've also been the laggards for banking. I keep hearing that, it drives me insane. All I would say with that is they are more mature. And I say they're more mature. One of the numbers that was quoted at me a week or so ago was there is 17,000 startups in fintech. 17,000. And all they're doing is picking up on our agility, or more often than not, our lack of agility. So over the next couple of slides, I just want to talk you through some of the things that are going on. And they're going on regardless. So self-driving cars, I'm a massive fan of. I don't own a car at the moment. Haven't owned a car for about 5 years. I live out in, I think, what you would refer to as the suburbs. I use public transport, and I love it. We've got one car between the family and the kids, and it works. And the sooner we can get rid of the car and be driven everywhere, it'll be cheaper, it'll be safer, it'll be just great. And my young kids, my 7-year-old and 3-year-old, I think Oscar, my 7-year-old, will probably learn to drive. But for those with kids or grandkids in the room, will your grandkids learn to drive? Will it be a skill that we need? And what's going to happen to us poor old insurers in the room? We all know about risk transfer and moving it from personal liability to commercial liability. What's going to happen in that situation? So advanced driving and self-driving autonomous vehicles, super, super exciting. What it will do for fleet and everything else, phenomenal impact on our industry, and we can do nothing to stop it. And if I keep going around, I refer to this as my wheel of fortune, but if I keep going around my wheel and look at things like IoT and the Internet of Things, again, in the same way we put new technology into our organizations, you're not going to go and buy a new home that has less technology today than you had 5 years ago or 10 years ago. In fact, if I went around the room and said, who's got an Amazon Alexa or a Google Home or uses Siri or all the things that we as consumers are using, they're slowly permeating their way into our office and workspace in a really, really exciting way. So what we're connecting and how we use that to derive data, understand risk, and more importantly, get on the front foot of those risks is exciting for me. I won't talk about big data because we can talk about big data until we're blue in the face. I loved some of the slides earlier. Super complicated. What I will talk about is social data. We are in the land of oversharers. You go on to the next generation's Facebook, Twitter, Snapchat, whatever they might be, we're sharing things. We have toothbrushes that tweet. I'll leave you to imagine what they're going to do. More importantly, toothbrushes that talk to your dentist to talk to you about how clean and healthy your gums are, which might impact your health or dental plans. So we are in a connected economy that's sharing things in an interesting way. And actually, when you put all these things together, that's when it starts to get exciting. Each of these things on their own, yeah, it's great and they're coming. But when you get to exponential growth, when you do things like Internet of Things, social data, and self-driving, imagine the situation. You're in a pub, having a glass of wine, a gin and tonic or a beer, snapped on Facebook, and someone says, Nigel's in the local pub having a gin and tonic with friends. Nigel gets in his car. Ooh, you're insured to drive. You've had a drink, Mr. Walsh. We're going to apply surge pricing immediately because we recognized you in the picture. We now know you're in the car. Surge pricing apply because your reaction time's gone down. It's a fact. We know it, right? It might be crazy. It might be creepy. It's possible. It's a case of how quickly it goes from possible to reality. Next stage of the equation is, when do I say to you, Nigel, we're not going to drive the car for you. We're not even going to start it. It's against the law. You're over the limit. Your policy is null and void. You're not going. Or when do we go, flip the switch, we're in automatic mode, and we'll do the old, if you're my age, you'll remember Knight Rider, where he's lying on the side of the car and he's getting driven home by Kit. Right? We're all that sort of age. It's when you put all those things together it starts to get exciting for me. And as you go around, you'll hear about machine learning and predictive analytics. This is one of the most important areas in my mind. Dan will talk you through it more. For me, a lot of this is about debunking these buzzwords, and I guess we're guilty as a consulting firm as what they actually are. I was chatting to someone earlier about SMAC. You remember just about a year ago, people were talking about SMAC, social media, mobile analytics and cloud. No one's heard of SMAC in the last 12 months. It's all AR, VR, machine learning, and there's a constant cycle of terms being thrown at us, and we're still there on our green screens. And if we're not on the green screens, we're on our 3-year program. And if we're not on the 3-year program, it might be a little bit longer. So how do we cope with all this change coming that way while the travel edge is going that way at the same time? This, for me, is what InsurTech is addressing. It's addressing all those things out there in a really, really agile, exciting way. Distributed ledger, no one will talk about the future without mentioning blockchain or distributed ledger. Again, from a hype perspective, I think this had a peak of interest very, very early on. We're now at the stage where we're getting into the hard graft of, let's go do something with it. Let's go prove it actually works. Let's go do more than a proof of concept or a pilot. How do we make this work for our organizations? And where, importantly, is going to work? And then finally, sharing economy. I don't own stuff anymore. Our next generation aren't going to be able to afford to own stuff anymore. What does that mean to us as insurers? And this comes back to a report that Deloitte put together around turbulence ahead and what's out there. And as I started at the outset, these things are happening regardless, no matter what. For those who were around in 1999, I remember the tech scene and the big bubble that was there. I think I went through about 13 M&As while I was at a startup company for quite a while. 13 M&As in about 6 months. And it's starting to feel like, is the InsurTech bubble about to burst? I don't think the InsurTech bubble has actually grown just yet. And to my FinTech, InsurTech comment, 17,000 versus 1,400, I suspect this one to grow. The difference being, though, I don't think insurers are sitting there with a pin trying to burst it. I think they're sitting there with their hands going, how do we work together? And that's the fundamental difference for me between FinTech and InsurTech. So it may not be a bubble burst, but there will be a moment that we all go, how do we collaborate for a better outcome for our consumers or customers? Again, you'll now know I've got kids because I'm reading books like A Squash and a Squeeze. Great little book. My point here is there's a really tiny space to go after. We know the insurance value chain. It's been defined for centuries. We know what's in there. All we're doing is now squeezing more and more companies into this space that can address this. And they are attacking it with gusto at every single stage of the cycle. Whether you're in old-fashioned policy claims, legacy insurance or specialty insurance or elsewhere, if you look at it from a capability perspective or from distribution. So there's about $8.5 billion of investment gone into this space in recent times. That's a hell of a lot of money that's gone into disrupting what we do and what we're protecting day in, day out. 50% of that money has gone into distribution. That to me says we want a better way to engage. As consumers, we've built our expectations, we've increased our bar, and all of these areas are getting significant amounts of funding. The two big ones, as I said, distribution, and the next one after that's actually sensors, because sensors affect everything. Again, smartwatches, health devices, monitoring devices for diabetes or elsewhere, in your car, in your office, in your workplace. For me, it gives us a really exciting opportunity ahead. A quick snapshot on how people are engaging, just to share with you kind of how I bucket it into 3 areas. In fact, I read something about this earlier today as well. Someone said to me, 25% of people are actually doing investing in the area. So right-hand side, whether it's AXA with a €200 million fund, Aviva with their garage program, XL Capital or whoever else in the space, 25% of people are actually building their own capability. So everyone's got a lab, an incubator or something right now. And there's a big push to go and generate a space in which we can be different. And whilst I love technology and I've grown up on technology, I also want to keep my feet firmly on the ground. Don't have a lab or an innovation space for a lab or innovation space sake. It's pointless. It's a great marketing event. It's a great, exciting thing to do. But if you don't understand your purpose at the outset, don't do it. And there's a whole conversation we can have about that as we go forward. The final bit in the middle is actually the most important piece for me. It's about how we create partnerships. And I actually see this as one of the benefits of being in insurance rather than banking. I can take the bank and disintermediate every single step of it. I've got Zopa for lending. I've got TransferWise for currency transfer. I can take it apart bit by bit. I've got I'm sure it's slightly different in the UK. I've got a building society account in the UK because as growing up as a kid, my parents went, you need a mortgage when you're older. You need to have a building society account. It still has £63 in it. I'm 41, 63 quid. They're making no money at all out of me. It's a waste of time, and I should shut it down. I can't let my mum down. My kids have got a bank account, but don't need it. They're doing it because I've told them that they need it. And I'm trying to get them to used to the idea of saving and how they do things. What's our equivalent in insurance? How do we get people to understand it? Go ask a 7-year-old what insurance is or what daddy does. Go ask a teenager. That's even more scary because they're buying things that they need to buy without knowing why they need to buy it. So we've got loads of issues inside insurance. One of them coming forward in my mind is education. Education to what you're buying, why you're buying it, and what it actually does when you need to use it. We did a study a while back that said when you have an accident, what's the first thing a teenager does? They don't call their insurance company. Dad, what's an excess? They have no clue whatsoever. So there's a really worrying debate for me in this sort of space that the InsurTechs are starting to address because they're making insurance sexy. There, I said it. They're making insurance desirable, exciting, a great place to be, a great place to work. You go onto Lemonade's website, what does it say? Forget everything you know about insurance. That's a good place to start for a next generation person, isn't it? Forget everything you know. You go onto Vitality, they're giving you rewards for being healthy, for going to the gym. They're not giving you money off, they want your money. They're giving you Starbucks vouchers or cinema things that you enjoy doing. So they really are changing how we actually engage as organizations with our end audience. I'm going to finish on this. It's one of my favorites. It's the Startup Petting Zoo. And as I said, when you go into this environment, make sure we're going into it with a clear purpose. Many of us will be part of boards, will be on the exec, in leadership teams or elsewhere, and one of your objectives will be investigate fintech or investigate insurtech. And one of my bugbears is we get a bunch of people calling me daily going, we want to go and do a pilot on this in that area. And my first question is, as you'd expect, why? What are you going to do? And if the answer is to tick a box for the board, I go, thank you very much, not for us, off you go. Unless we're going to radically change our business and what the outcomes are for our clients going forward, don't enter this race. I'll come back to it when we're sitting down later on. For me, it's a race. It really is a race to agility here. But this is what I see across the estate typically. You've got folks sitting there going, never happened to us. And we've all got the stories, whether they're big legacy organizations or otherwise, going, it's not coming or it's coming too slowly, we need to do nothing. In fact, last year in Las Vegas at the InsurTech Connect event, I met a gentleman from a very large insurer who had 3 years left to retire, and he goes, yeah, it's interesting, not going to affect me. And I wanted to scream, because for me, we have a brilliant opportunity right here, right now, to take this, embrace it, and work out what it means. If we therefore choose to do nothing, that's fine. That's a perfectly acceptable outcome. But we need to be able to embrace it and understand what we're going to do. And as you go through about it, you go through people thinking really hard, other people going, our numbers are important, it's a quarterly thing to the stock market, it's numbers, and we're going to invest nothing in that space. All the way through to the folks going, I'm going to dip my toes in and play with a startup or play with a new technology. Folks at the startup zoo, those folks that have adopted animals. And we've all been there. We've all gone to the zoo with your kids, you go, we've come home with a giraffe. How on earth did we come home with a giraffe called Fred? But we see this in the startup space. We're really focused on AI, machine learning, whatever it might be, and we're going to play with this one startup and see if it works. Again, a perfectly fine, acceptable outcome if we're clear on purpose as to what we're doing. All the way through to we're fully engaged, we've adopted loads, we're sponsoring an accelerator, or we're building a full stack. And I could probably map out a whole bunch of carriers. You could do it yourselves. Where do you sit on this spectrum? Where's your ambition on this spectrum? And what are you going to use this for going forward? So when you're asked, when you're engaged to go and say, let's go and play with one of those 1,400 startups, A, start with why, but B, finish with, where do we want to end up on this? Because most people aren't going to go out there and build a whole new stack from scratch. But you may adopt a couple of animals and work out what they mean to your business going forward. So that was a quick introduction to InsurTech here and now. For me, it's very much here. It's very, very much now. Be delighted to take questions as we go forward later on. Dan. Good luck.
Okay, thank you, Nigel. So, I will read your quote for you, or no. I'm going to talk a little bit more specifically about, and thank you, Nigel, for the sort of global overview. I'm going to talk a little bit about what we're seeing here in Toronto. For those of you who don't know me, Outside IQ is actually based in Toronto. We were actually just acquired by a New York firm, but our R&D center will remain in Toronto. We do have locations worldwide, so we can compare and contrast a little bit with some of our findings here. I do want to just back up a step, and I think InsurTech is the topic today, but it's really a subset of fintech, and we've seen a lot of things happen in fintech more broadly that I think will be mirrored very closely in InsurTech, and it's important to keep that in mind. And I have a very simple model, and so I don't have as many logos as Nigel, but you know, we're seeing sort of two clear sides to fintech. We're seeing competitors on the one side where they're really trying to disrupt. They're really competing against the incumbents, right? And it's folks in Canada. It's folks like Wealthsimple or Lending Club, or you know, Lending Tree in the U.S. Or these are folks that are competing for the same dollars and competing against the banks, for example, for small business loans. We're also seeing a whole generation of cooperators as well, and they're really enabling banks to sometimes compete against those competitors. Sometimes they're enabling back office system processes, enhancements, efficiencies, or better ways of doing business. And we're seeing crossovers. So in Canada, we've seen several players jump from one side to the other, and this is a great model. But regardless of where you are in the spectrum, there's a common set of tools that we're seeing applied, and we'll talk a little bit about those in InsurTech as well, because they seem to be the same tools. And there was a great session on blockchain, big data today. These are some of the common analytics, AI. These are some of the common toolbox types of technologies that are being applied on either side of this spectrum. And we are seeing, like I said, in Canada, in fintech, this first crossover was probably best known was the Thinking Capital example with, I think, CIBC, where they said, you know what, we're not going to compete head on with these little guys. We're going to actually empower them to compete against banks in a partnership setting. So CIBC partnered with Thinking Capital, and you can now get a loan in under 24 hours by CIBC passing this business on. And why do that, right? Does it make sense for Thinking Capital? Absolutely. CIBC has a great customer base. They have customers coming in, and they're looking for a product that CIBC might not be comfortable selling. And so they're passing that business on. They're not losing it. They'll have a partnership where, for sure, CIBC, it's in their best interest to do this, but it's business that would otherwise be lost to them. So it really sets up a win-win scenario. We're seeing that in fintech globally. We're seeing that now in Canada. I think that was a great first example, but there are others now. I think the InsurTech landscape in Canada and globally is a great parallel where we're seeing the same activities. We're seeing competitors, but we're seeing a handful. We are really early days. You know, Nigel said we're early days around InsurTech. In Canada, we're even earlier days. We are seeing a first generation of competitors. We're seeing innovative models that are available elsewhere, like peer-to-peer insurance or micro-insurance. We're starting to see those come up. We're seeing new generations. Sonnet's an example from a carrier actually trying to compete. We see new offerings like Zen Insurance. We see Tuque. You know, this is great branding. I don't know if there's anyone from Tuque here, but this to me seems like a company where a bunch of guys sat around a campfire and said, you know, we should start a new insurance company and offer out insurance. And then you go to their website and it's, you know, using advanced analytics and new approaches to underwrite new products. So very cool stuff. I'm not sure I got that out of the brand, but I look forward to it, and it's exciting. We're seeing carriers come up from the US. So Energize is actually a customer of ours. They're using our technology, and they're competing now in Canada. We're seeing new models like Be Sure as well. So exciting, but early days. And of course, we're seeing a set of enablers as well, or cooperators. We do work with several carriers in Canada now, and have for a number of years. We enable, right? It's our mission. We're seeing great ways to dip your toes into the water as well. So Cookhouse Labs is a great example of that. You know, I couldn't agree with Nigel more. Don't have an innovation center for the sake of having an innovation center. But at the same time, there are mechanisms out there, and Cookhouse Labs is a great example of that, where you can go and participate in projects in an industry-friendly consortium manner and dip your toes in the water in a very inexpensive way, and you gain more in the insights and the actual process than you invest. And so we're seeing a lot of early days here, and we're seeing also the same technologies empower these movements. So blockchain, AI, cognitive computing, big data analytics, right? We're starting to see crossovers potentially too. So I would not be surprised, and I think we've heard rumblings of Trove and others where potentially you're going to take your client base that trusts you, and be able to expose new products. And it's only a matter of time until we start to see that model in Canada. Trove does that, for example, in Australia and the US. So in terms of north of the border, we are seeing some differences, and that's important to note. It is a different environment, right? There are market differences. There are regulatory differences. I saw a regulator, not to name them in case they're here, come out and say we really are doubtful on peer-to-peer, on it being an approach that would work in Canada. Maybe not great when the regulators start getting out in front of this, or maybe great. But there are differences. You can bet that the regulators in the US are not saying the same thing. There are legal differences as well, privacy differences, right? PIPEDA is very different than the US. We are starting to see carriers, though, that are investing heavily in technology. And you know what? It's going to be a painful process to try to catch up from this. We're seeing different cultures emerge as the old guard passes through the gates. We're seeing cultures to innovate now. And we're seeing these early days. It's important to see what's on the other side of the pond. And I'll just talk about this very briefly, because I won't, I think, ruffle any feathers here. What if I use a banking example? I was in with the head of innovation at Barclays, and at their center in the UK, and they have a whole building, for innovation, totally dedicated to innovation, a whole building. And I said, wow, this is very impressive, having been to some of the bank's innovation centers here, or rooms, sometimes. So, if you have an innovation room that's in an innovation center, that's great. It's a start, but it's not a whole building. And he looked at me and said, yeah, this is great, but we have 11 other innovation centers throughout the world. Right? That's the type of scale of investment that some of these guys are making today. Excuse me. AIG would be an example in the US. But you do have to be very careful, right? I've seen statistics where AIG spent over $300 million on AI or some of these technologies, and they still have underwriters who have the ability to completely ignore the models they spit out, right? So, take all of this with a grain of salt. We are seeing, and I'll just talk about two use cases as examples where there are differences, right? Telematics is a great one. Everyone, that was like smack, right? This is a big buzzword, and it goes along its actual track of adoption regardless of the buzz. You see a lot of misleading press out there. I saw one article that said, there's a higher percentage of new policies being reported for adoption of telematics. And that's great when you realize that on a percentage level, if you're going from 0, it's very easy to, to accelerate. We're seeing a lot of differences here because of PIPEDA and because of the regulatory nature of this. A lot of the policies, or all of the policies to date, have been discount only, and that's for programs in terms of IoT and wearables as well, right? The vitalities or moves of the world. So these are all great things, but they will evolve, and they'll evolve on their own time scale. We're seeing a lot of buzzwords around AI. We've been developing a specific component for carriers for years. We actually have a platform that can be trained in different ways to go and grab different content. It can be unstructured, and you can determine upfront what are the things that you want to look for. And that level of training makes it different for one application to another. But this iterative learning platform can go and create these clean reports. And we've used these in different ways. We've used them to create models, and that's great. We've used them without models, and you look at me and say, what do you mean by that, Dan? What we're seeing is that actually you can create a bunch of these events, and great if you can use them for models, but it's not actually necessary. So we're talking about a very complicated technology that we can dumb down and create a bunch of data points and use them for exception-based processing. We had a carrier who just did a study who moved to exception-based underwriting, where they took their small business line and they implemented this, and they just quizzed their underwriters. What are the things that they want to look for that would actually make them pause on a business? And then we automated that to look for those indicators. And they found a 15% loss ratio decrease. Right? Very, very impressive on the bottom line. And then you ask, well, what about the top line, right? And actually, because it turned into an exception-based process and they were able to process more quickly, they actually were able to grow their book of business, right? It's that type of simple win that you need to look for when you are making these innovation projects happen. This is something that actually the actuaries, and great, we can talk about models all day, but they had no say over this because it was purely passing through or pushing things out into an exception queue for manual underwriting. Very simple to consume now. So it's these types of wins that really I would encourage you to look for as you start to invest, to start to look for specific wins. Don't be, as Nigel said, dipping your toe in all the pools and hope that something sticks, right? But this is something that a new level of technology makes possible. There's a lot of context that goes into being able to understand and pull back accurate data points to be able to provide that exception-based underwriting, and that's great. Apply that great technology in new and wonderful ways, but make sure that it's use case driven. So that's my overview. I hope that makes sense, and now I think we'll open it up, and James has some questions, and hope you do too.
So thank you, gentlemen. That was great. Great to hear the global perspective. Great to hear the Canadian perspective. Maybe where we'll start, is the topic about opportunity versus threat. And Nigel, you mentioned 1,400 InsurTechs right now, in the global ecosystem. Would you say that there's more of a prevalence for InsurTechs being enablers and helping to, support, the business models of current incumbents? Or would you say that there's more competitors ready to eat everyone's lunch in this business?
So I'm an opportunist at heart. So I always see the world, I guess, with the glass half full. So for me, this is the enabling opportunity for us to go do stuff. We know, without being disrespectful to insurance organizations or large organizations full stop, that often getting stuff done and investing in innovation, digital disruption, all those cool things that have to take place, as well as running the business and keeping the lights on, is often difficult. We're not all Barclays or AIG or whoever else. So for me, what I've seen more of the let's partner with a startup or new technology in a isolated environment, and in essence, just outsource our R&D. It's just it's not necessarily about the technology, it's more about the people and attitude. So let's go work with those people and the attitude that are unconstrained in their thinking, unconstrained in their approach and methodology, but probably highly constrained on their budget, which means that they get very, very difficult things done in a smart way because they haven't got loads of money to throw at it. So for me, I see it as an opportunity. Just to Dan's point on things like regulation and stuff in the UK, Trove, actually, US startup, actually launched in Australia first, but then the UK because the regulatory environment was more favourable. So if you speak to Scott or Andrew, any of the guys at the team, they'll tell you some of the hoops they're running through to get through stuff. To put it into context for the UK market, back to global versus Canada, 2 years ago I was involved in Startup Bootcamp where they had the first cohort. That's 10 InsurTechs going through their accelerator program of 3 months. On demo day, I think they had about 600 people last year in a old converted church in the East End of London going through, let's look at these 10 great companies. 4 weeks ago, that event took place again for the second cohort, and there'll be one more next year. To get to that point, they interviewed about 2,000 startups. The 11 that went through were watched by nearly 1,000 people at the O2 Arena. So when I said insurance is sexy and there's an opportunity, 1,000 people from industry, from insurers, from VCs, from tech companies, all looking on at going, how do we use these guys as an enabler to accelerate our business, not necessarily as a threat. The threat comes from the banking guys, like I said earlier, who go, excuse my French, screw it, it's taking too long, we'll do it on our own. And that's exactly what's happened on the banking side. So I think we have to take it as an opportunity now and partner before they lose faith or patience and run ahead.
That's great. What do you think, Dan? Is that your perspective as well?
Yeah, I would agree. I think you're going to see competition from all sides. You're going to see the agile carriers that have invested in technology compete with you in new and innovative ways. You're going to see new startups compete with you. And I think if you're behind the curve, not all is lost. I think there are very good ways of partnering now in a very focused way to catch you up.
Thank you. So which area do you guys see as the most fertile, perhaps the most heavily funded area right now within InsurTech?
You want to go?
Go for it. Yeah.
So heavily funded, factually, is distribution and self-service, right? It's the easy piece to go after. What's the most fertile? I think it's a different question. And often we should say, follow the money. I would almost argue that the following the money in this instance would say, those startups that have engaged in that space around cool UI and fancy interfaces have taken the chunk of that market. For me, the most fertile is leveraging the data. I started my career in a manufacturing environment where trees would come in one end and bunches of guys would sew together with sewing machines with glue in them, veneers for desks and pedestals and everything else. We manufactured stuff. In insurance, we manufacture data, but I'm sure it wouldn't take many of us to say that we are not as good as we should be at leveraging that data. More importantly, back to my point about sharing economy, we're openly sharing more stuff as well. So there's been loads of studies out there that say we can take open data and get as good a price for you than using all my claims history and all the things I know about you, whether you're known or unknown. So why would I spend years and millions leveraging and moving and manipulating that data when I can take AI, machine learning, algorithms, and all those cool things, and all that dirty data, to your point about not using a model, and driving benefit. So for me, I'd start with data and I'd finish with data.
As a data guy, I'd have to agree, but I didn't say it. I would agree also with distribution. I think we've seen that in Canada as well. I think that unfortunately, we're also seeing differences here. I think slow to invest on the claim side. I think there's opportunities there to obviously get more efficient and more accurate and more user friendly. But that's on the backside, and I think we'll see that ripple through. I think we'll see as we get more exposed to and more comfortable with some of these new approaches around data handling. We'll see some of that investment shortly.
To your point on distribution, again, if I look at the next generation of business leaders or consumers or otherwise, and ask myself the question, do they care about our brand anymore? If I look around this room, I'd say, yeah, everyone in this room cares about brand. And if you're in the UK, We've almost killed our industry using technology, using aggregators, been around for 20 plus years, and we now buy based on price. Go UK, right? What a really silly thing to do. How do we get away from buying based on price? Well, for our generation, it's going through them and going, I recognize that brand as the top X brand, and I know they'll pay if something goes wrong. In fact, my wife called me this morning for travel insurance, and she said, here's my 3 options, what do you want to go for? And without even thinking, I went for the brand that I most recognize and have a level of confidence that will deliver. But for our next generation, the distribution isn't necessarily coming to you directly. It's what happens when our products become embedded or invisible or actually the byproduct of what we're buying. So I think the business model of distribution, the business model of insurance in general, may dramatically change over the next 3, 5, and certainly over the next 10 years. It's not going to disappear, but for me, from some of the things and conversations we're having, the business model will change. You look at someone like Munich Re, Hartford Steam Boiler out of the Munich Re group, and some of the things they're doing, or how Rolls-Royce service engines. You're buying uptime. You're not buying an insurance product, you're buying uptime. It happens to include insurance. What happens when that's our world going forward? What happens when our claims environments that we need to improve on for a moment of truth and whatever else become fully online, 24/7 monitoring service centers that will call you proactively?
So on the topic of distribution, because Canada, I would say, is lagging the UK, the US with respect to digital distribution in particular. Some emerging players, but not full scale, like you see in other jurisdictions. So to that topic, what is the future of the digital insurer going forward? What does that look like?
Now, this is the million or probably 100 million, if not multiple $100 million question. Again, for me, it's understanding our role in society. I am absolutely undoubted in the fact that we will exist as an industry and exist for centuries to come. No doubt about it whatsoever. How we distribute it cannot be the same as it was yesterday. The fact that people keep saying to me, will brokers disappear over the next couple of years? I don't think they will. But I think how we engage with them and how we flip between digital direct or digital enabled through brokers will change dramatically. I think we're not going to sit here using the same technology we used, multiple years ago. So there has to be a fundamental change that's enabled by data that allows us to have a different conversation around risk with our clients.
I'll just add, I don't think it's just, obviously technology will drive this, data will drive this, but it's also clients are changing too. If you look at the demographics, and this has the banks worried. It's any trusted provider who's really known for their brand. I bank with one bank because that's the bank I grew up with, plus or minus. But my kids, there's no way that will happen with them, right? They're going to bank with the bank that gives them the highest savings account points on their interest rate. We're losing some of that brand affinity. I think with that, distribution starts to change. I think that you're going to have to be more competitive as we start to share as well some of this data. Things are opening up, and we're seeing in the UK with PSD2, for example, we're seeing the markets open up, and the best products are going to win. It's not going to necessarily be the best brand.
And for me, if you go back to distribution around orchestration, I've got multiple financial institutions I engage with. I've got multiple brands I engage with, Amazon being one of them. It's the everything store, we all know that. And it feels for many as our default search place for lots of things that we start out with. And then we move on to our next favorite store, whatever else it may be. And they may not have a cool, sexy interface, but as sure as hell, they deliver time and time again. And if they don't sell it on Amazon or through Amazon, it's come from somewhere else, but through the platform. And you might be the orchestrator of that person's convenience factor. So for me, that means, actually, will you do my banking, my saving, my short-term loans? Leanne showed Cover. It's a UK-based startup from Freddie McNamara and team. You take the picture, you got insurance for the hour, 2 or 3 hours. That appeals to certain generations. A generation without a car, like myself, for example, might go, actually, that's quite handy. But equally, if the autonomous option was there as well in the future, I might take that. But how do you orchestrate that? So for me, that's going to be the key to distribution is making it as easy and convenient as possible. And I can't envisage that not being a digital first, number one, but with the opportunity to go speak to a human being when I see fit to do so.
Okay, some element of choice in there. So Dan, given that future of distribution with digital being at the centerpiece, what role does AI, cognitive computing, and machine learning play in that distribution landscape?
Yeah, I think it starts from the very beginning. We're seeing banks and carriers now use chatbots, for example. And this is another example of a change of demographics. Much like the customer service centers, the fight over whether you would have them onshore or offshore, we're seeing a new generation saying, you know what, I'd rather have an instantaneous response on the simple things provided through a chatbot. If it's accurate, it knows when to pass things off, and it's fast and 24/7, right? So you're going to have these trade-offs, even at the very front end of this, that involve technology choices. How advanced do you go? We're going to see, I think, that some of the best products win because people are going to have, with these modes of distribution, more options, more tailored products win. We are going to see a lot of the analytics driving what those products are. So I think, you know, it's not just a distribution question, it's that we're evolving to a point where the best products, the most tailored products are going to win, and that's going to be driven a lot by the technology and the analytics that you're capable of as a carrier.
Back to my feet being firmly on the ground, I'm a tech person, 99.99%, and I'm a huge fan of what it can enable. In this sort of environment though, if there's a chatbot there, I'll give you an example from my mum. She's not in the room, so she can't give it out to me. So my mum decided to try and use one of these chat systems. It was a chatbot that gave her an instant answer. She did whatever she was doing, typed in her question, got her answer back. She's 73, she's definitely not in the room, she'd kill me. So she got her answer back straight away. But because of it, and because it was so quick, she didn't believe it. So she then still piled in with a phone call and sat on the call center. So one of the things we have to be able to do with technology, what we can do with technology, is understand our audience and understand them down to a unique, mass personalization for a segment of one. If I picked out groups of people in this room, whether we're male or female or age or whatever else, we could group us accordingly like we do for most insurers. But we are all unique, and we're all in unique situations at different moments in time. So for that moment in time, at that person, how do we treat you? And I think this is where AI and data starts to come in and go, without being creepy, Nigel's on his commute home, he's going to be in and out of tunnels on the train, therefore don't try and call him. Or in this situation for my mum, it should have been we've got your question, Lorraine, we're going to come back to you in less than 24 hours. And that meets her expectation. If I did that to my son, he's going, where's my answer? Why hasn't answered just yet? So you have to know your audience.
So, okay, so you've described the future here. So how do carriers actually get there? Build, buy, or partner. What are you seeing as the most prevalent model, both from a global perspective and a Canadian perspective?
You're Canadian?
Well, I guess as a vendor, I'd say partner too. But no, I think what we're seeing is first you have to decide on some surgical problems that you want to tackle. And if you come up with a generic strategy and say we're only going to build, I think you're going to run into trouble. If we're going to only partner, you're going to run into trouble. If you come up with a use case that makes sense for you to partner for a piece of that, then great. It's important that you realize what you're strong at and what you're not strong at. When we work with carriers, often we won't do the modeling, and that makes them feel better, right? So we could do the modeling for you. We're going to get you all of the right data points. You're going to tell us what we need to provide, and we pass it off. We could go the full distance, but they want to keep that as their secret sauce, and that's fine. You keep what you want as your secret sauce, and then you find the best of breed to do the rest. And I think that's probably the right model that we've seen the most successful.
Yeah, I'd actually concur. So partnering for me seems the most favorable, more often than not because of people. And it's a race for talent. And if you're out in the market going, come and work for an insurance company or come work for a startup on data science, your race for talent is hard, right? It's really hard. I'm fortunate enough to work for one of the largest consulting firms in the world that does great stuff around technology, and we're still losing out day in, day out by guys who want to go and work with office dogs and small startups and groups of people that are going to make differences in a very, very different way. Ultimately, I work for a corporate organization. So for me, partnering seems to be the most favorable approach. It doesn't mean to say you've got to stick with one. Again, I've got clients that have organized chaos, and that's their own words. They have some parts of the business doing acquisition or investment, and that's a strategic goal. Some of them, they think that's vanity in other cases. Others that are going, let's go build it ourselves and see if we can take a group of people out of our current organization, put them into a separate silo and see what happens and have them compete. And then others, as you say, partnering, which for me really is the most favored and the most popular option that's out there. One last comment, you mentioned Agile as well earlier. Agile often gets bundled with the word technology. We've got to do this in an Agile sprint. And Agile for me more and more is less about technology and more about organizations. And what I mean by that, when I talked about speed and hustling earlier, was some of the startups I work with go, right, we can launch this in 3 weeks. We can get you a new product to market, off you go, 3 weeks, 6 weeks, 12 weeks at the longest. Unfortunately, Nigel, we spent the last 7 months in your legal department trying to argue about a clause. Can you help us? So Agile for me isn't about technology, because technology is no longer your prohibitor. It's about Agile organizations. So when you think about creating, if this is the route that you go down, or even partnering, you need to wrap it with an organization that's enabling that group to be successful, not necessarily just the technology side.
That's a great point. So it seems to me if partnering is the best option or the most prevalent option that you're seeing in the marketplace, how do you sense the opportunity in the first place? There's so much information, news, research, and events popping up around InsurTech. What is the best way for everyone in the room here to stay connected and engaged to this ecosystem?
So this is, again, another big question in that it's happening so quickly, it would be difficult for you to say, follow this one group or engage in this area. There are so many conferences that we now engage on that I now actively turn down because they're all me too. It goes back to depending on what stage of the journey you're in and what your ambition is. I've worked with one insurance company for many years that never wants to be a digital leader at the top right quadrant, but wants to be the best average provider. And that's a perfectly fine ambition. It's clearly articulated, everyone understands it and knows what it means to them. And once you understand the organizational ambition around innovation or change, then you've got to work out what are those key topics you want to go after. Do you go after it via business line? Do you go after it around business capability? Or do you go after it around technology? Or do you do all three? So for me, define the area, set your ambition, and then work out what you want to go after it. If it's technology, there's technology conferences. If there's InsurTech specifically for partnering with startups, again, there's some great conferences out there, both in Europe, US, and here that are all popping up day in, day out. The next big one is something like InsurTech Connect in Las Vegas. There'll be about 3,000 people there, 100% focused on InsurTech. That doesn't mean to say it's the right one or the only one, because you have small round table groups. You get working parties for AI and machine learning. You have underwriting associations. So it really is, it's hard to say there's one answer to the question unless you define the ambition at the outset.
I just add, I think we've seen differences between successes and failures with one sort of variable popping out in my mind, and that's executive sponsorship at the business level for some of these initiatives. And if you don't have that, don't bother. You know, don't send a bunch of tech guys to do some fun stuff and expect them to solve your business problems if they have no support for solving those business problems. Whether they're going to join an accelerator or they're doing their own innovation team or they're partnering or they're doing, you know, a partner project with a vendor, don't waste your time. And you know, an example of that, we convinced an actuarial team for a big carrier in the US that they should really be using a bunch of variables, including some variables around safety inspections for restaurants, as an example. And the models proved themselves out, right? They actually helped build these, and that's great. We went over to the underwriting side, and their innovation was being spearheaded by the actuarial group. No, that does exist, actually. Sorry for the actuaries. I just wanted to point that out, that innovation can come from anywhere. But so we went over to the underwriting side, and the chief underwriting officer leaned across the desk and he said, Dan, I've been underwriting small restaurants for 30 years, and I've never once used a safety inspection. Right, and so it died. It died on the vine, and that was a waste of everyone's time. And great, it would have been good to know up front that was going to die. Safety inspections make sense even logically, but if you have a bunch of grease, you're probably going to have a bunch of grease fires, right? So there was no flaw in the logic. There was no flaw in the math here. It's just not the way he wanted to do business, right? Mm-hmm. So just that executive sponsorship is really that one.
I mean, the other thing, to answer your question as well, I mean, I'm sure everyone in this room is on LinkedIn in some way or connected online in a social media fashion of some sort. Jump into LinkedIn, you'll find hundreds of articles out there around the topic from each of the lines of business or each of the specific areas. Equally on Twitter or elsewhere, there's a very engaging community that's global. That matters to me because I'm actually learning a huge amount from the East. If you look at the scale and size and speed of what's going on in Ping An or Zhong'an or these guys right now, and how they're engaging, what technologies they're using, and the speed they're running, it is terrifying. Terrifying.
So on the point of terrifying then, which InsurTechs do you see as particularly making a splash here in Canada or perhaps more broadly in North America?
Go ahead.
Oh, I think we're too early. Ask me again, or we can maybe record this and tweet how wrong we were 2 years from now. I'm seeing the potential for that middle layer where you can take potentially competitive products and partner with the existing carriers. I'm seeing that as a real fertile opportunity. I think hopefully one or more of the carriers in this room will be looking to partner in the right way to make that a reality over the next 24 months. I think there's a real splash there to be made. I think that if you haven't started innovating, you better start now. I think you're going to miss the boat, right? And you're going to go the way of the dodo. People said that 5 years ago. Maybe you still have time now. If you haven't upgraded your core systems, you may have missed that boat. But you better start innovating now.
In terms of companies, for me, we'll have all seen the press on Trove. Again, I'm hugely impressed with how Trove have got to market. The same for Lemonade, but you'd argue your innovation budget with $70 million raised is quite, everything's relatively straightforward to go do. Now they've had a tough journey. What I love about those organizations is they're transparent and their approach to getting stuff done. There's two key tracks for this. There's the guys out there making loads of noise and actually when you undo the covers, not much happening. And the guys who you see nothing about whatsoever. And I'm working with one company on the policy administration side that their goal is to drive product speed to market. Now you probably wouldn't have heard of them if you didn't know them or whatever else, but they've signed 24 clients with premiums going through their books in their first 12 months. 24 clients, of which I'd say 80% of them are large multinational carriers that wanted to test the market with a brand new product in less than 3 months. I'd go to any of my existing carriers today and say, can you get a new product out there in 12 weeks or less? And most of them think I'm mad. Yet these guys are there, up and running in a hosted environment and pushing products out there. And if it's failed, guess what you've wasted? You've wasted 12 weeks. You've not wasted 5 years of program, the market moving past you, whatever else. So there's two camps out there. The camps that are making a big splash and capturing market share, and they're doing great. I admire what they're doing. And the guys that are just hunkering down and making a difference in the market.
That policy admin player, are they in Canada?
They are UK, but they have got an opportunity in Canada and US right now.
Interesting.
And we're working with them right now to drive out the scale.
Do I have time for one question from the audience, Graham? Or? Got it. Got it. Okay. Well, gentlemen, thank you very much for the insights here. I'm sure it's opened up everyone's perspective on InsurTech. Thank you.